Some 2025 caravans are smart buys in 2026. Others will quietly drain your money, and the difference has nothing to do with looks or features. Prices already shifted behind the scenes model by model, while most buyers weren't watching. Some caravans absorbed their drops early. Others are still sliding, and a few are holding firm for very specific reasons. This isn't about finding the cheapest deal. It's about timing, pricing pressure, and knowing which 2025 caravans still make sense right now. Get it wrong, and you overpay. Get it right, and you lock in value. Let's break down the top 2025 caravan choices in 2026 and why each one earned its spot. Jayco Jay Feather. What changed first was not quality, but patience. In late 2025, dealership yards quietly filled with unsold towable units that were supposed to move fast. Interest rates tightened, floor plan costs climbed, and lightweight touring builds lost their urgency. That pressure landed squarely on practical models that once sold themselves, including the Jayco Jay Feather. From the 2025 model year, dealers did not announce it. They adjusted numbers, quietly, deliberately, and with very little warning. The change signaled stress, not failure. And that distinction matters for money decisions now. Here is the proof. Listings tracked across Car Sales Australia show identical Jayco Jay Feather units. Same vehicle identification numbers, repriced multiple times. Early stickers reading $52,990 slid to $44,900 before year's end. Some dipped further after sitting beyond 180 days unsold. No upgrades, no recalls, just inventory pressure becoming visible. Screenshots from archived dealer pages confirm the sequence. This is depreciation, recorded in real time, and it resets leverage toward anyone patient, enough to wait calmly. Longer waits shift. Outcomes. Why did this happen here? Because lightweight RV demand softened fastest once financing tightened. The Jayco Jay Feather depends on volume, not scarcity. When production continued at peak pace, supply outran urgency. Dealers faced daily interest charges, storage fees, and aging inventory penalties. Clearing space became cheaper than holding. That is why numbers moved before marketing ever did. It was accounting, not emotion. Understanding that prevents overpaying later. Once floor plan clocks start ticking, price cuts follow predictably, without drama or announcements at all. Quiet math wins every time, again and again still. So what does that mean for money? It means the Jayco Jay Feather has already absorbed its sharpest drop. Buying after that correction reduces downside. Maintenance costs remain low, parts are widely stocked, and tow weights stay manageable. There is no promise of appreciation, only controlled ownership. The financial win comes from timing, not features. Paying yesterday's price now locks in regret. Waiting converts dealer stress into leverage. That leverage shows up in inclusions, freight concessions, and cleaner contracts signed slowly, not rushed. Control stays yours, always, if patient, if observant. Still, when entry models reset, everything above them reacts. The Jayco Jay Feather is not broken, it is exposed. Exposed to interest math, storage costs, and timing. Recognizing that keeps decisions calm. It separates correction from collapse. And it prepares you for what happens next, when larger, heavier units face the same pressure, but with far higher carrying costs. That shift is already visible. What unfolds above this price band exposes a far more uncomfortable truth, where hesitation carries heavier consequences and corrections grow sharper. Crusader Musketeer. Pressure did not arrive loudly. It crept in through spreadsheets, interest statements, and silent dealer meetings held after closing hours. Mid-range. Touring builds felt it first. Not entry level, not top tier. The Crusader Musketeer from the 2025 production run landed directly in that squeeze, where expectations rose faster than wallets were willing to follow in real time. Here is the evidence. Dealer bulletins circulated late in 2025 showed advertised pricing sliding from $91,995 down to ranges between $78,000 and $82,000 depending on layout. These were not clearance banners, they were quiet revisions. Same stock numbers, same factory options. Archived dealer listings confirm the movement week by week. That drop reflects pressure, not defects. Why did the Crusader Musketeer move sooner than heavier premium rigs? Because it sat in the most fragile pricing band. Too expensive for cautious upgraders, not exclusive enough for luxury seekers. When borrowing costs rose and trade values softened, hesitation appeared immediately. Dealers watched foot traffic slow while floor plan interest kept compounding daily. Holding inventory became a liability instead of leverage. This is where the math matters. Every additional month unsold added carrying costs that could not be recovered later. Transport, insurance, capital lockup, those numbers forced decisions. Cutting early preserved cash flow. Waiting risked deeper losses, so prices moved before marketing caught up. That timing gap created opportunity for anyone watching closely and refusing to rush. From a money perspective, this is controlled depreciation already realized. The Crusader Musketeer did not collapse. It corrected. Build quality stayed consistent. Parts availability remained stable. Ownership costs did not spike. The financial danger passed when the first reductions hit. Buying after that reset shifts risk away from the buyer and back onto the dealer's balance sheet. There is also a longer signal here. Mid-range touring models reveal market truth before headlines do. When these units adjust, higher-priced builds usually follow with delay. The Musketeer became an early indicator, not an exception. Understanding that pattern prevents emotional decisions later, especially when show pricing tries to mask previous drops. That shift also explains why financing conversations changed tone. Longer approval times, smaller deposits, and stricter valuations slowed commitments. Each delay compounded dealer exposure. This environment rewards patience and documentation. Speed benefits sellers. Calm benefits wallets. Always, only now. When timing finally flips, leverage follows. Ignore early pricing movement, and you overpay. Recognize it, and negotiation becomes structured and calm. Documentation replaces persuasion. Numbers speak. The pattern shifts here, away from quiet corrections and toward a segment where confidence slowed before demand truly vanished. If this breakdown is saving you money already, support the channel by liking the video, subscribing for pricing updates, and sharing your take in the comments. Your input shapes future coverage and helps surface what dealers prefer to keep quiet. Lotus Off Grid. This shift did not come from panic. It came from hesitation. When the market tightened, off-grid touring did not collapse, but it paused. That pause reshaped pricing for the Lotus Off Grid from the 2025 production year, in a way many missed at first glance. The movement was subtle, controlled, and deliberate. And that is exactly why it matters for money decisions now. Here is what the receipts show. Dealer listings and auction records across late 2025 reveal asking prices easing from around $118,000 down into the range of $106,000 to $110,000, depending on configuration. No sudden drops, no clearance signage, just steady recalibration. Screenshots from archived listings confirm the timeline. This was not distress selling. It was demand recalculating itself. Why did this happen? Because off-grid buyers slowed instead of rushing. Battery technology shifted quickly. 48-volt systems gained attention. Solar capacity expectations rose. Some buyers chose to wait rather than commit. That waiting period mattered. Inventory aged. Carrying costs continued. Dealers responded with modest reductions instead of aggressive cuts. The Lotus Off Grid absorbed depreciation without losing its footing. This distinction is critical. Unlike mid-range touring builds, the Lotus Off Grid did not suffer from oversupply. Production volumes were tighter. Demand did not vanish. It hesitated. That hesitation created a narrow pricing window rather than a collapse. The result is a controlled adjustment that already placed the sharpest decline behind it. From a financial standpoint, this changes risk. Buying before hesitation exposes you to early depreciation. Buying after adjustment shifts that cost away. Ownership expenses remain predictable. Build credibility stays intact. Parts availability remains strong. The money advantage comes from timing rather than negotiation theatrics. Calm patience outperforms urgency here every time. There is also a broader signal. Off-grid capable RV builds now face scrutiny instead of blind enthusiasm. Buyers ask harder questions. Dealers feel that pause immediately. When expectations change faster than production, pricing bends carefully instead of snapping. Recognizing that pattern helps prevent chasing features that may already be discounted quietly behind the scenes. This is where discipline pays. Avoid paying yesterday's optimism price for today's recalibrated demand. Let listings age. Watch revisions, document movement. When reductions happen without marketing noise, leverage increases without confrontation. That keeps conversations factual and grounded. Entry models corrected first, mid-range models followed, off-grid builds adjusted with restraint. What comes next is comfort and construction, where pricing behaves differently because demand never truly left. The next model proves how insulation and livability change the entire trajectory. Stay focused. Avida Topaz. Silence can be more revealing than panic. When pricing holds steady, while everything else shifts, it signals demand that never truly disappeared. That is exactly what happened with the Avida Topaz from the 2025 build cycle, and the reason its movement deserves close attention. This model did not rush to the bottom. It adjusted slowly, deliberately, and with purpose. The receipts confirm it. Dealer listings from Queensland and New South Wales show modest revisions, not dramatic cuts. Early advertised figures near $105,000 eased into the range of $96,000 to $99,000 across late 2025. Archived screenshots show fewer revisions and longer gaps between changes. That matters. It indicates negotiation, not desperation. Why did the Avida Topaz behave differently? Because comfort-based touring never left. Travel patterns shifted away from short bursts and toward longer stays. Insulation, interior quiet, and livability mattered more than aggressive styling. The Avida Topaz was built around that reality before it became obvious. Composite construction reduced temperature swing, layout efficiency, reduced fatigue. Those features protected demand when hesitation spread elsewhere. Financially, this creates a different risk profile. Smaller discounts mean less room to chase a bargain, but also less exposure after purchase. Depreciation is flatter. Ownership costs remain predictable. There is no rush to clear stock because turnover stayed consistent. That stability carries value when volatility increases around it. Another signal appears in dealer behavior. Instead of price slashing, conversations shift toward inclusions, delivery timing, and trade adjustments. That is not accidental. It reflects confidence in turnover. Dealers do not discount aggressively when replacement stock timing is uncertain. They protect margin instead. Understanding that prevents wasted effort pushing for reductions that are unlikely to appear. This is not about paying more. It is about paying once. Paying the correct number after adjustment avoids the second loss that comes from buying early and watching value fall. The Avida Topaz already absorbed its minor correction. What remains is steady ownership, not sliding numbers. From a broader view, this model shows how the market split. Builds focused on real comfort stabilized. Builds chasing volume corrected sharply. Recognizing which side a RV sits on protects money better than any feature list ever could. After this, stability becomes rarer. The next entry reveals how brand scale and familiarity altered pricing behavior again, and why predictability suddenly became its own form of protection. The pattern continues. Watch it closely. That awareness slows mistakes. It replaces impulse with clarity. It turns patience into leverage. And it ensures decisions are guided by evidence, timing, and restraint, not pressure, urgency, or showroom emotion when conversations begin and documents land on the table. Jayco Silverline. Consistency became the quiet winner when uncertainty spread. While other builds chased reinvention, this one stayed grounded, predictable, and methodical. That decision shaped how the Jayco Silverline from the 2025 model year behaved once pricing pressure rolled through the market. It did not dodge adjustment. It limited it, and that restraint changed the financial outcome in a measurable way. The proof is visible in listing history. Archived car sales Australia data shows average advertised pricing easing by less than 10% across most Silverline layouts. Units initially listed around $120,000 softened into the range of $108,000 to $112,000 by late 2025. Fewer revisions, longer holding confidence, no sharp downward stair steps. That pattern matters more than the absolute number. Why did this model resist deeper cuts? Scale and familiarity. Jayco's service network spans regions others cannot reach. Parts availability remains wide. Ownership costs are predictable. Buyers know what they are getting. In uncertain conditions, that knowledge slows hesitation. Dealers understand this. They protect margin where confidence exists and release pressure elsewhere first. Financially, that stability narrows negotiation windows, but reduces post-purchase regret. Paying slightly more upfront often prevents larger losses later. The Silverline already corrected early and then stabilized. That sequence matters. It means depreciation slowed sooner, not later. Buying after that inflection reduces downside exposure significantly compared to models still searching for a floor. There is another factor at play. Incremental improvement does not attract speculative buyers, but it keeps long-term owners engaged. Improved insulation, refined interiors, and steady construction updates did not generate headlines, but they sustained trust. That trust translated directly into pricing behavior when conditions tightened. From a wallet perspective, this becomes a trade. You give up the possibility of a dramatic bargain. You gain predictability. Maintenance budgets remain consistent. Resale volatility stays contained. That matters when broader markets feel unstable. This is not about excitement, it is about control. Dealer behavior reinforces the signal. Instead of deep discounts, conversations pivot toward delivery timing, accessory inclusions, and trade valuations. That tells you everything. When sellers negotiate around edges instead of core price, confidence still exists. Recognizing that prevents wasted effort, pushing for cuts that are unlikely to appear. Some RV models corrected sharply because confidence evaporated. Others adjusted early and then held. The Jayco Silverline sits firmly in the second group. It is not immune, it is resilient. That difference protects money quietly and consistently. As the countdown tightens, the next step reveals a different form of protection entirely. Not brand scale, not comfort, but size. Downsizing altered demand patterns in ways most missed. The next model shows how footprint alone changed pricing pressure almost overnight. Stay with it. Before the next price shift hits, make sure you are subscribed. New breakdowns are coming that explain which models stabilize, which keep falling, and when timing flips. Staying subscribed means seeing the changes early, before decisions are locked in financially. Jayco Terrain. Size, not brand, rewired the market first. When fuel costs, storage fees, and campsite limitations converged, large caravans stalled. Smaller, self-contained builds moved instead. That shift explains why the Jayco Terrain from the 2025 model year behaved differently, while others softened. It was not immune to pressure. It was insulated by demand migration. That distinction matters because it changed pricing behavior before dealers even reacted. Here's the proof. Used listings across regional dealer sites show 2025 Jayco Terrain units holding within a narrow band. Asking figures near $170,000 eased only slightly into the range of $165,000 to $168,000 by late 2025. Archived listing screenshots confirm minimal revisions. That stability stands out sharply when compared against towable RV inventory adjusting weekly. Why did this happen? Downsizing accelerated faster than expected. Owners calculated fuel burn, insurance, maintenance, and storage. Compact, all in one platform's reduced friction. The Jayco Terrain fit garages, urban driveways, and national park limits where caravans could not. Dealers noticed inquiries remained consistent, even as larger stock stalled. Demand did not spike. It simply did not disappear. From a financial perspective, this alters risk exposure. Smaller footprint means lower ongoing costs. Fuel usage declines. Registration and storage charges fall. Repairs cost less because systems are integrated and accessible. That reality limited forced discounting. Sellers were not racing to clear space. They could wait. Buyers sensed that confidence and responded with steady interest instead of hesitation-driven bargaining. There is also a timing lesson here. When markets contract, size matters sooner than features. Large caravans accumulate carrying costs quickly. Compact RV platforms do not. That asymmetry explains why pricing held firm. Negotiations shifted toward delivery schedules and trade allowances rather than headline reductions. That protects residual values after purchase. This behavior matters for money decisions now. Buying after stability. Forms reduces surprise losses. The Jayco Terrain already revealed its floor. Depreciation slowed early. Waiting longer does not unlock dramatic savings. It only risks losing availability. That trade-off favors clarity over speculation and patience over impulse. As size shrank, demand concentrated. As demand concentrated, pricing steadied. That sequence explains why this model resisted the broader correction. The final entry reveals a different form of insulation entirely. Not size, not familiarity, but construction and systems that aligned perfectly with where the market landed next. It arrived early, before the shift was obvious. That timing preserved relevance, and it explains why the last model sits alone at the top, shaped by foresight rather than reaction. That distinction closes this segment and prepares the ground for the final reveal ahead, where durability finally overtakes everything else completely decisively. Crusader Trooper. The final position belongs to a model that did not react to the market. It anticipated it. Long before pricing pressure surfaced, this build aligned itself with durability, restraint, and system depth instead of volume appeal. That foresight explains why the Crusader Trooper, in high-spec form from the 2025 production year, behaved differently once the correction arrived. It adjusted, but it did not unravel. Here are the receipts. Dealer listings tracked through late 2025 show advertised pricing easing from roughly $130,000 into the range of $115,000 to $120,000, depending on configuration and build date. Reductions appeared once, then stopped. Archived screenshots show no repeated stair-step drops. That pattern signals completion of correction rather than panic selling. Why did this model settle instead of slide? Construction and systems. Composite walls reduced thermal stress. Higher capacity electrical architecture supported longer. Independent travel. Suspension and chassis specification targeted durability rather than showroom shine. When buyers reassessed priorities, this configuration already matched the new criteria. Demand did not surge. It stayed consistent. That consistency protected pricing. Financially, this is critical. The sharpest depreciation already occurred. Subsequent movement slowed quickly. That means the cost of waiting diminished, while the risk of missing availability increased. Carrying costs for dealers remained manageable because turnover stayed predictable. That removed urgency from negotiations and limited further concessions. There is another layer here. High spec does not mean excess. It means completeness. Systems were integrated instead of added later. That reduced upgrade temptation and future expense. Buyers did not need to retrofit power, insulation, or structural elements. That stability lowered total ownership cost, even if the initial purchase number appeared higher on paper. This is why the Crusader Trooper separated itself. It did not chase trends. It absorbed them before they mattered. When market sentiment shifted toward restraint, this model already reflected it. That alignment matters more than brand momentum or marketing reach. It explains why resale confidence remained intact, even as surrounding segments softened. For money decisions now, the message is clear. This is not where dramatic discounts appear. It is where regret is avoided. Buying after the adjustment means exposure is limited. Waiting longer does not unlock hidden value. It risks availability instead. That trade-off favors decisiveness, informed by evidence, not urgency driven by sales pressure. The numbers already moved. The correction already happened. What remains is stability, not collapse. Acting within this window protects capital, reduces second guessing, and prevents paying twice through depreciation and delay. Calm timing beats aggressive bargaining, because leverage comes from preparation, documentation, restraint, and patience alone today. Entry models corrected first. Mid-range followed. Off-grid adjusted carefully. Comfort stabilized. Compact platforms held, and this build, shaped by foresight, landed where the market eventually arrived. That is not luck. It is alignment. Understanding that alignment is the advantage. It replaces guessing with clarity. It turns market noise into structure, and it ensures the final decision feels deliberate, controlled, and defensible long after the paperwork is signed and the RV leaves the lot. If this breakdown helped you understand which 2025 caravans actually make sense in 2026, let me know in the comments, especially which model you're considering. If you found value here, hit like so more buyers see it, and subscribe for upcoming updates as prices and inventory keep shifting.